Everybody keeps saying the same thing. We have a housing shortage, but do we? The U.S. Chamber of Commerce and Zillow, they say about 4.7 million units underbuilt. Freddie Mac, 3.7 units underbuilt. Goldman Sachs, 3 to 4 million. Realtors Association, what is it, 4 million? But I want to show you something that doesn't add up. As of 2026, get this, the United States had roughly 148 million housing units, depending on the quarter you look at for the housing data. It's right around there. At the same time, we have 134 million households. $148 million units. Wait a second. It seems like we have a lot more units. So let me ask you a simple question. If we have more homes than households, how the heck do we have a shortage? That's what I'm going to break down, and I'm going to walk you through the numbers step by step so you can actually see where that disconnect is. The big picture is this, the 148 million units versus 134 million units. You're going to see the total housing units really sitting between 137 million, and it could be as high as 134.8. I think that's the biggest estimate I saw. But what we're seeing is this gap. And what is that? Around a 14 million unit gap? So it's somewhere between 14, maybe 15 million. That's a gap. And at first glance, it looks like a huge surplus. We have 15 million or 14 million extra units. It looks like we have more than enough housing for everyone. Well, that's what some people are yelling from the rooftops. And they're saying, housing market's going to crash. It's 2008 all over again. But that conclusion is wrong. And here's why. And I'm going to make this extremely simple. Imagine that you have 140 chairs for, in theory, 130 people. We'll call them households, though, because sometimes it's more than one. But what does it make? Simple. 140 chairs, 130 people. You think everybody gets a seat. We have 140 chairs for 130 people. Everybody gets a seat. But now let's add in real-world conditions. Some of those chairs are broken. Some are locked up in a closet in another room. Some are reserved for somebody else. In other words, somebody's got more than one chair. And some people, because again, some of this is units, they can't share a chair and they need their own chair. Now suddenly you run out of chairs, even though you technically have more chairs than people. And that's exactly what is happening in housing. So let's go back to this 148 million units and break it down. First off, not all housing units are usable. Some of those units are vacant because they're uninhabitable. Some are second homes. Some are seasonal properties. Some are sitting empty as investments. If you've ever been to Bellevue, Washington, you know what I'm talking about. And some are in areas where there's no jobs and no demand. So right away, the headline number is overstating real supply. Second problem, and this is what most people miss, vacancy is not a flaw in the system. Vacancy is required. A healthy housing market actually needs empty homes. And that's because people move. They change jobs, they get divorced, they upgrade, they downsize. We got the silver tsunami, right? This huge trend. Where are these people moving to? And for that to happen smoothly, you need slack in the system. And so economists generally estimate that a balanced market needs about 5 to 8% vacancy just to function. And for like normal, like for owner occupied, it's closer to 2 to 3% housing. And so when you apply that all across the roughly 148 million units, you're talking about 16 million homes that should be empty at any given time just for the system to function. So now let's adjust the math. Let's take 148 million units, but let's subtract out 16 million for vacancy. So what do we end up with? 132 million? Now you're talking about 132 million effective housing units. Now compare that to the 134 million households, and it suddenly, wait, that surplus is gone. Now we're right on the edge, and this is where it gets more interesting. And I'm going to put a chart up on the screen. This is data showing the percentage of young adults, roughly ages 18 to 34, living with their parents or roommates. They're at elevated levels compared to historical norms. And what this chart is telling us is that household formation is being suppressed. In plain English, people who would normally be forming their own households, they're not doing it. Not because they don't want to, but because they can't afford to. So when we say they're about 134 million households, that's low. If housing were more affordable, you'd see more people move out, more households, and more people live independently. And when that happens, demand for housing does what? It increases immediately. So the shortage is partially hidden. You can't see it. And I don't know what those numbers would be. We have 134 million households. That should be probably 138 million households, depending on who you listen. And it doesn't show up in the raw household numbers because people are still doubling up. There's people living together that wouldn't ordinarily live together. There's people living in their parents' basement because they can't afford to move out, and they wouldn't be doing that if there was other housing choices available. So let's talk about where the shortage actually exists. This is important because this is where the narrative that everything's going to crash, everything's going to bust, this is where it really breaks down. We do not have a uniform housing shortage across the United States. We have a shortage of affordable housing in desirable locations. I always think about the stuff, I didn't go there and look at this. I've been to China, but China, they had these ghost cities, and we're building because we anticipate our population is growing. They're getting out ahead of it. Oh, now we don't need it, so they knock it down. Those were housing units. So there's plenty of homes in parts of the country where there are fewer jobs and less population growth. Get a cheap house in Detroit. But at the same time, there are severe shortages in high growth areas. Texas, Arizona, Florida, Tennessee, Nevada, where I live. We don't have housing. And the housing that you have, there's a quality issue. There's a quantity issue. There's a location issue. So it's not just quantity. It is location. It is price. And now let's look at the chart. This shows U.S. housing starts since 1980 to 2026. And if you've been listening to me for a while, you know that I've been talking about this for a long time now, since 2008. New construction collapsed right after the financial crisis. Look at that chart. Boom. Builders stopped building. Financing dried up. Development slowed dramatically. And even though construction has picked up since then, last year was great, it has not been enough to catch up with population growth and household demand. And that is why groups like Freddie Mac and other housing estimates or analysts, they think we're somewhere between 2 and 5 million housing units short. But again, the shortage is concentrated in specific price ranges and locations. And now let's layer on another factor that's making it worse right now. And this is something that's relatively new. Nobody predicted this. It's what we call the lock-in effect. Millions of homeowners refinanced or purchased homes when interest rates were down in that 2 to 4% range. Today, mortgage rates are closer to 6 to 7%. So if those homeowners sell their house and buy another one, their payments could double up. They could go up significantly. So what can they do? They stay put, and we're seeing that. That means homes that technically exist are not actually available on the market. We're at historical lows, guys, for actual activity. So the effective supply shrinks even further. So let me bring this all together. Do we have a housing shortage? Yes, but not in the way people think. We do not have a simple shortage of housing units. We have a shortage of housing that is affordable, located where people want to live, and actually available for sale or rent. And there's another level. How many homes in the inventory are not safe? How many are even inhabitable? Depending on who you believe, there are probably 6 million homes. Look at this. We're getting even lower. Ooh, what does that take us down to? 126? 6 million homes that are inadequate to be considered safe. And by the way, I bought houses throughout the United States. You can buy a house for $1 in some neighborhoods, but they're going to cost you hundreds of thousands of dollars to make habitable. That's still a housing unit. That's a very different problem. And that's why the numbers can look like we have a surplus while people feel still like there's a shortage, right? Now here's the clean takeaway. We don't have a housing shortage. We have a housing mismatch. A mismatch between supply and demand, between supply or price and income, and between where housing exists and where people need it. And we have a mismatch between households that need safe housing and are able to attain it where they live. And if you're an investor, by the way, this really matters, because the opportunity for you is not just in buying more property. It's in understanding where demand is outpacing supply and why. And you can help solve that. And that's how you find the right deals in the right markets at the right price points. And that's why people like me and my clients buy homes and become landlords, so we can help solve this. If you can keep a home from falling into disrepair and becoming uninhabitable, you saved a home. Remember the old Ben Franklin quote, "A penny saved is a penny earned"? Well, for real estate investors, a house saved is as good as a house built. Now, by the way, if you like this type of content, subscribe and watch my channel. I've got a ton of content on how to build a passive income portfolio. I'd start with one that went viral a few years back. 3 steps to build a passive income empire. Try it out. It works today as it did back then. And if you have comments, please share them. And if you're hearing from somebody who says, we have too many houses, the housing's going to crash, send them this video.